Hello, everyone. George DeSantis here with the look at the market for the week ending March 31st, 2017. So let's read the disclaimer before we begin to look at charts. Trading and investing has large potential rewards and large potential risks. So this video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice, since I am not one. And let's begin by looking at the monthly chart of the S&P as we usually do. And here's that monthly chart of the S&P 500 that we usually look at. Since it's a monthly chart, of course, it moves very slowly. Each bar is a month's data, so there is very little, movement up and down, volatility on a monthly chart. However, we can see that we are still in a major uptrend since this trend started somewhere back here, back in, I think it was in March, this particular uptrend. So that's what we need to be aware of. We are a major uptrend long term. MACD is confirming that. We rose from below the zero line all the way up to being above the zero line. We're now at positive territory at 17.67. And at the bottom of the chart, Elder Force Index is above the zero line, way above it. And although it came down a bit recently, because we've pulled back a little bit, it's still in bullish territory. Let's take a look at the seasonal charts, etc. And before we go to the weekly chart. So let's take a look at the seasonals. So this is a seasonal chart of the S&P 500. Let me explain what we're looking at. First of all, each one of these little lines or squiggly lines here represents 1 year's activity of closing prices for each day. In other words, for January 1st, for January 2nd, for January 3rd, there is the closing price for each day for that particular year, each trading day. And then what this thicker line is, and there are 10 years here, and this thicker line is an average of these 10 years. So when we look at this line, what we find is that this is usually the best time of the year to be trading the S&P, to be bullish on the S&P, because the numbers are these. It's up 10 out of 10 years between March 7 and May 2nd, about here. And that gives us a move on average of about 4%, because I had to drop 2009, which was an outlier, a big outlier. 2009, it was up 34% during this part of the year, because that was a big turnaround from March to June, So this seasonal chart is telling us that this is the best time of the year to be owning the market in general, yes, as measured by the S&P. So let's take a look now at the 3-line chart, the regression channel. And here's the regression chart. In other words, we are looking at these 3 lines. The market fluctuates between the upper line of 90% and 10%. And last week we saw that it was somewhere around here. It was right here. And now we're still at about a 10% line. The whole idea here is that, as I mentioned last week, when we're at this level here, we're likely to see a move up toward the 50% and even the 90% line. And you can see that happens here, it happens here, and it happened, in this case again. Okay, so here we went up again, and we are going up again. It seems that that's the case. When we put this together with the seasonal chart, it looks as though the market is likely to go higher. All probabilities, of course. It is likely to go higher from here. Well, let's take a look now at some of the charts, the S&P on the weekly chart. And here's the weekly chart of the S&P 500. Now, just to recap what we saw last week. Last week we saw this bearish bar. It was really a bearish engulfing bar because the body of this candle engulfed this candle. It came pretty close to hitting the parabolic, but this week it hit the parabolic. So that's the one caveat we have here that sort of argues against the continuation of this uptrend that we've been having here. However, this past week's bar was what is called a bullish piercing line. And let me explain what that is. As far as this candlestick is concerned, it gapped down to open. In other words, it opened lower than this close. It gapped down and opened here. However, the bears tried to take it down even more, but the bulls will have none of it, and they pulled it all the way up to a high and then closed here. So when we look at the comparison of this candle with this one, we can see that this close is more than halfway up this red body. This close here, if we draw a line here, exactly here, we'll see that that close of last week is higher than the halfway point on the red body. That's why it's called a bullish piercing line. And so we have a contradictory setup here. On the one hand, parabolic is telling us look out for a reversal of the trend. On the other hand, we have this very bullish piercing line. The other thing to notice is that the Kalman filter is still above the instantaneous trend line, indicating that we're still in an uptrend. Last week I pointed out that since the close of this candle was just at the 9 EMA, it's likely we find support here. Well, apparently we opened lower, but we closed higher. We didn't get to the 38.2% retracement level, Fibonacci retracement level. And of course, the instantaneous trend line is now approaching the 2300 level. It's still possible we pull back to 2300, but as we'll see in some of the other charts, I think a better argument could be made for a continuation of this uptrend now that we've seen this minor pullback. So let's take a look down here. We find MACD pulling back a bit, but no divergence. So that is not as ominous a sign as if we had a divergence, a bearish divergence. And here we have CCI, Commodity Channel Index. It's still above zero. And usually the zero line is where we find a change in direction of the trend. So at the bottom of the chart, RSI 12, still above 60%. In fact, it ticked up a bit, of course, last week since we closed higher. So, higher than we opened, rather. So let's take a look at a daily chart. This chart is still looking very bullish, except for the parabolic here that might give us a signal, but that could be overridden by other factors. So let's look at the daily chart. So here's a daily chart of the S&P 500. And we saw last week that we were hovering around this 2350 line, okay? That yellow horizontal line. And then we even opened lower on Monday, but then on Tuesday, Wednesday, Thursday, and Friday, we trended up. So what we have now is that the Kalman filter, this yellowish line, crossed above the instantaneous trend line, this light blue line, signaling the first day of this uptrend. We're also seemingly establishing a squeeze of the Bollinger Bands. So the next question then is, do we ride the band up, the upper band, or do we ride the lower band down? I'm betting we ride it up. This Mesa indicator is very strong. We also hit the parabolic here, this parabolic yellow dot. We also hit it on the daily chart. So that tells me that we are likely to see the parabolic go below the price bars next week, Monday, Tuesday, Wednesday. If that's the case, of course, that's signaling a reversal of the trend on the daily chart. So we're going to find out pretty soon whether or not we go up from here or we go down. If we continue to go up, we'll be riding the upper band of the Bollinger Bands. That's my guess. And notice, first day of this uptrend. At the bottom of the chart, we have MACD trending up. And if you remember from Alex's work, One of the best times to be entering a trade is when MACD is trending up from below the zero line. So we have that here. This is just the sine wave that is included in the Mesa setup. So let's take a look at the weekly chart of the Nasdaq. Here's the weekly chart of the Nasdaq composite. Couple of things here. First of all, the Kalman filter is still above, way above the instantaneous trend line, indicating that the trend is still up. Now we did have this sort of trading range here, consolidation period. In fact, we closed all the way here the week before, but last week we opened lower, but we closed higher than the close of the previous week. That gives us a bullish engulfing candle, since the body of this candle totally engulfs the body of this candle. This is a bullish engulfing candle. One caveat, we hit the parabolic here. So we may get some fluctuation here. We may get the parabolic going above and then switching back very quickly to below the most current bar. We'll determine that as we go into the week next week. But the bottom line is that this instantaneous trend line is still so far away from the Kalman filter. The trend is still intact. And we have a 9 EMA still showing us that prices are basically above that too. Now, in the middle of the chart, RSI 12, which is a very good trend indicator on a weekly chart, is still above the 60% line. And in fact, it trended up last week since we had this bullish bar on a NASDAQ. And MACD showed a little weakness, but no bullish, no bearish divergence. So it is not something that we should be too concerned about. Let's take a look at a daily chart. On this daily chart of the Nasdaq Composite, what we clearly see here is that after we had this great red bar here, parabolic was hit, went above the most recent bars, and now it was hit Thursday, and on Friday, parabolic went all the way, this little yellow dot here, all the way below the Friday's bar. So that is signaling a switch to an uptrend again. When the parabolic is below the most recent bar, it's an uptrend. The one thing we need to overcome here is, if you notice this horizontal line, it shows that on Friday, the Nasdaq Composite, the daily chart, just about hit that level here, that high. And so we need to overcome that high to confirm this uptrend. We'll see how that develops. On the bottom of the chart, we see MACD trending up, and also we see elder force below, above the zero line. So all of that is pretty bullish. And here's a chart with the VIX volatility index, and so we can see that it's still below that 13.5 level that Larry McMillan identifies as a key level. As long as we stay below there, this trend should continue. The uptrend should be intact. So I just want to show you that it's at 12.37 right now as of Friday's close. And here's a weekly chart of the S&P 500 showing the impulse bars, Alex Elder's impulse bars, painted red, green, and blue. We can see on the right side of the screen we have a blue bar, which allows us to go long or short. However, I don't think it's wise to go short here. We still have a very strong uptrend. We are pulling back into the buy zone between the 9 and the 30 EMAs, the 9 EMA and the 30 weighted moving average. So let's take a look at the daily chart. Now what we saw with the daily chart was that we were going through this pullback. We went right into the buy zone, and since then we've traded up. And we see that the MACD, as we saw earlier, was trending up as well. So based on this information here, green, we're not allowed to go short on the daily chart anyway. We're not allowed to go short. So this trend is still intact. Let's take a look at something else. And we're running out of time. Quick look at the McClelland oscillator. We can see that it was way down here. And as I mentioned, we hope that we get this kind of move we had back here. And that's exactly what we're getting. Have a nice weekend. The market is still looking very strong. We'll talk to you again next week about where things are going.